Why hello there, Hector Deville here once again. In this specific video we are going to talk about entering the trade. Okay, we are going to be talking about the specific price patterns we are going to be using as far as jumping into a position. Now, there are two different ways of entering the trade. First one is entering off the trigger chart, and the other one is entering straight from the setup chart. Okay, I do realize that some of you may not really feel like meddling with the shorter time frames with the trigger chart. That's okay, no problem. I'm gonna give you both options. They are both equally valid. Okay, you usually are able to squeeze your entry few pips early or earlier if you do indeed zoom into the trigger chart, but again, it's not necessary. Okay, I'm gonna give you both options. We are gonna be studying both options in detail. All right, and then, well, I'll let you decide whichever fits your trading personality better. All right, okay, let's get started. Okay, here we are with our typical trending scenario with those moving averages nicely plotting the like we want them to be. Okay, the 30 above the 50 and the 50 above the 100. This would obviously be an uptrend. Okay, and price harmonically swinging off the dynamic area of support and resistance. Alright, so the last swing has just finally concluded. Price has retraced back to the dynamic area of support and resistance. Let's assume we can indeed find some type of confluence around that area. Who knows, maybe we may have a trend line there, maybe we may have some Fibonacci retracements in there, you know, just a few different elements of individual support and resistance around the dynamic area of support and resistance. So as price begins to bounce around, we are ready to search for long opportunities, hopefully riding a whole new swing in the direction of the trend. How we would go about triggering this trade of the trigger chart? Well, this is how. So as price pulls back to the dynamic area, we zoom from the setup chart into the trigger chart. Alright, let's imagine this is the last swing. Okay, basically I am trying to signify here this last swing from the setup chart. Now we would be looking into it from the trigger chart. Okay, basically from a zoomed in perspective. Now, as you probably know, price obviously doesn't move in a straight fashion within the swing. It usually gives us micro swings both up and also down. All right, we usually get some type of micro swinging pattern as well there. Well, the idea here is to draw the retracement trend line, okay, on the retracement part of the swing, all right, which is obviously this part here, and we are to draw the outer trend line there. Okay, on the trigger chart. Basically, we would be linking the swing high, the swing uttermost upswing point, and then we would simply link that point with any resistance point as price swings back down. Okay, and effectively giving us the retracement outer trend line. All right, driving price back down to the dynamic area of support and resistance. All right, well, as that happens, we are going to be waiting for that outer trend line to give way. Upon having price come back to the dynamic area, we are going to be waiting for a bounce of that area, and therefore we'll be waiting for the actual breakout of that retracement trend line. Okay, that's the idea here. Simply mark the outer trend line and then simply wait for the breakout of that outer trend line in the very short term on the very short term charts. However, we are not just going to be entering as price ticks above or beyond that breakout point. Instead, we are going to be waiting for what I call the breakout pullback continuation pattern. The breakout pullback continuation pattern is nothing but the technical confirmation, or rather the confirmation of a breakout from a technical point of view. Now I'm gonna repeat that. I know it's a little bit of a mouthful, but I'm gonna repeat that. So again, a breakout pullback continuation pattern is the confirmation of a breakout from a technical point of view. The reason as of why you don't want to try the straight breakout, the initial breakout thrust right there, is because price usually tends to give us on occasion some fake breakouts. Okay, price seems like it's going to break through and immediately after it turns back down once again. So in order to avoid that, what we are going to be doing is to simply again wait for the breakout, then wait for the pullback. Okay, and from there price, if this is indeed a valid breakout, price tends to score this type of register this type of pattern, and as price ticks above the breakout initial thrust, maybe let's say, I don't know, 2-3 pips, okay, it doesn't really matter, 2 or 3 pips, let's not get picky there, 5 pips if you are trading off the daily, weekly time frames, again, it doesn't really matter, few pips up and down. Like I say, once you see price breaking through, what you are going to do is to simply wait for price to pull back, and you are going to place your buy stop order. At least that's what I personally do. I place a buy stop order above the breakout thrust. So as price begins to turn around once again, okay, in the direction of the original breakout, right there your pending order is immediately executed by your broker, and therefore you are effectively filled into the market. All right, that's the idea here. Alternatively, you can simply wait. Okay, you can simply wait for the whole breakout pullback continuation pattern to conclude, and once price ticks above, you simply manually click on your buy button. Both options are equally valid. Okay. Now, as far as the stop loss goes, you place the idea is to place the stop loss immediately below the pullback aspect. Okay, this being the breakout aspect, this being the pullback aspect, and this being the continuation aspect of the whole breakout pullback continuation pattern. Right. So, if that's your entry, your stop loss would be immediately below, again 2, 3, 4 pips below the pullback aspect on this final entry pattern. All right, obviously if this was a downtrend, let me pause the video 1 second. Okay, I am done. I've flipped the picture upside down, and now as you can see, what we have here is a downswing and then a little bit of a pullback back to the dynamic area of support and resistance in a downtrending scenario, right? This is the micro swinging pattern that I was mentioning before. That's the retracement outer trend line, and well, eventually what we would simply do is to wait for the breakout pullback continuation pattern. Our entry would be, as usual, a few pips above the high of the breakout thrust, so that would be our entry there, and our stop loss would go somewhere in there, few pips above the pullback aspect in this breakout, in this whole breakout pullback continuation pattern. Again, it's basically the same approach, just flipping it upside down. All right, but for the sake of simplicity, let me just pick the case example of an uptrend, and I will continue the presentation using this example. Okay, now we are looking into the American dollar against the Swiss franc on the 4 hours time frame. As you can see, this is a nice trend with all the moving averages in order, parallel to each other, etc., etc. Well, we have multiple swings within this trend. Okay, we have one swing there, dynamic area of support and resistance, another swing there, dynamic area of support and resistance, yet another one, and well, eventually this trend comes to an end with that solid breakout. Please mind how it's rather important to read price action around the dynamic area of support and resistance. We get a solid breakout with that massive bar, and now price, well, almost next to the 100. The 50 is already curling down, etc., etc. But at any rate, we have 4 valid swings, okay, 4 solid swings within this trend. Anyway, let's focus on this swing here and this swing here, okay, the central swings. And well, let's imagine we were looking to trade this bounce, for example, okay, this bounce of the dynamic area of support and resistance, and we would be searching for trading opportunities at that junction of the chart. So, as price retraces back down, by the way, please mind how we have a former swing high there, all right, if I project that level, now it's working as resistance, and if I use my Fibonacci tool, we can see how the retracement banks right to the peak of the 50% Fibonacci retracement, at any rate from the 38, somewhere in between the 38 and the 61. So at any rate, we do have a confluence of support right there around the dynamic area of support and resistance. So is this a valid bounce? Yes, it is indeed. Okay, that's indeed a valid bounce we would try to search for or to profit from. Okay, so again, right there at that junction of the chart, we want to zoom into the trigger chart in order to mark the retracement trend line. In fact, we can already see the retracement trend line in the setup chart. Okay, we don't even need to zoom into the trigger chart for that. Please mind how we have that swing high, which is the top of the swing, and that resistance swing point in there. You see, so that gives us a micro retracement trend line in there. And at the same time, sometimes you will find that you don't even have to zoom into the trigger chart in order to spot the breakout, pullback, continuation pattern. Actually, I'm gonna be zooming in a little bit more just to show you guys what I mean here. Breakout, pullback, continuation. Do you see that? Okay, this breakout, this pullback, and this continuation pattern. Well, our entry would be just above, a few pips above the breakout thrust. That's the breakout thrust there. Right there is where we get triggered into this trade. The stop loss goes few pips below the pullback aspect, this being the pullback. All right, you see how, oops, sorry about that. Do you see how price pulls back down to retest the trend line from below? Okay, again, former resistance, once broken and retested from above, now it's working as support, and from that point on we can search for continuation moves. That's exactly what we do there. That's our entry, that's our stop loss, which, by the way, well, as you can see, price takes off for a whole new swing, and it never quite challenges our stop loss at all. Okay, from entry point, price simply cruises in our direction. Alright, but at any rate, if you so wish, I will zoom into the trigger chart. This is the 4 hours time frame as my setup chart, so I'm gonna be zooming into the 1 hour time frame. Just give me a second. Let me scroll forward, see if I can find that. Oh, there it is. That's the retracement trend line there. Oops, I may have to zoom out a little bit more here. Okay, by the way, do you see this micro swinging pattern that I was mentioning before? Okay, price swings and micro swings on every single time frame. Okay, so if you take the 4 hours time frame as your time frame of reference, as you zoom into the shorter time frames, you will find micro swinging patterns as well there, right? So in fact, let me redefine the retracement trend line. By the way, it's very important that you don't get sloppy with your trend lines. Okay, always begin your trends at the beginning or at the uppermost, however you say that in English, at the very top of the previous sorry about that, at the very top of the previous swing high. That's where you want to draw your trend lines from. Then search for a swing high, and there you have it. There you have your retracement trend line. Okay, effectively signifying this micro swinging formation. Okay, we get the breakout, nice breakout there, another nice breakout candle. Okay, from there price comes back down here, right? Comes back down to retest the trend line from below, and well, as price breaks out and pulls back, we just need to place a buy stop order few pips above that breakout thrust. Okay, I usually use a pending stop order, a pending buy stop order in this case. So it gets triggered right there. That's my entry, that's my stop loss, and well, as I scroll forward, off it goes, price on a whole new swing to the upside. Alright, very, very prototypical price action pattern. Breakout, pullback, continuation, entry, stop loss, and off it goes for a whole new swing. Again, you will find this type of price action, very common, all right, very commonly on your forex charts. By the way, please mind how price gives us not only a retracement trend line, but in fact is some sort of a channel. All right. Do you see the retracement channel? This is, whoops, sorry about that. This is what in the trading lingo, this is what's called a flag. All right, this is a flag in the forex lingo. Basically, in a trending scenario, you see a flag whenever you have a swing and a retracement channel. All right, again, a swing, which you apparently that would be the pole of the flag with a little bit of imagination there, and this would be the flag in itself. All right, that's a flag formation. That's all right. You don't really have to draw the lower boundary of the flag nor the pole in itself. Just simply draw the retracement outer trend line and simply wait for those breakouts. Okay. By the way, we are still looking into the American dollar against the Swiss franc on the 4 hours time frame. I simply let me scroll back. That was our trend there. Okay, so I was scrolling forward to the to the front of my chart, and I found another fantastic example there. Okay, another typical a trending price action where price is giving us multiple swings in the in the direction of the trend and taking off the dynamic area of support and resistance. All right, so this is another prototypical example, another prototypical swinging pattern. Please mind how we also have the former swing high there, former resistance. If we project that, whoops, sorry about that. If we project that more or less in a straight line, you can see how price bounces off that level. And moreover, it also we would also have probably the Fibonacci retracements around that area as well. Exactly, banging right off the 61% Fibonacci. So again, we have another confluence around the dynamic area of support and resistance. So is this a bounce we would be interested in trading? Yes, we would. So, pretty much the same thing. We are to define the retracement trend line. Again, we don't really have to zoom into the shorter time frames to identify the retracement trend line there. Let me draw the retracement trend line. There we are, linking the previous swing high there. Okay, with another resistance point within the micro swinging pattern to the downside. In fact, does this remind you of anything at all, guys? Let me just redefine that for a second. It won't take more than a minute or two. All right, there we are. Does that sound familiar at all? Yes, that's another flag, okay, another pole and another retracement channel. As you can see, flags are very, very common market events within trending, within trending scenarios. Okay, so again, you simply define the the outer trend line of the retracement, wait for the breakout, the pullback, and the continuation. As we can see, let me mark the. All right, there we are. Whoops. There. As we can see, we can also identify the breakout and the pullback in the setup chart. Sometimes it's not necessary to zoom into the trigger chart. You usually get a much sharper picture in the shorter time frames, but again, in occasions it's not even necessary. Okay, so breakout, pullback, and from there price begins to trend up once again. Our entry point, once again, right there, that's where we would get triggered. Our stop loss would be there, right below the pullback aspect. As we get triggered there, a little bit of congestion, a little bit of consolidation before price eventually takes off on a whole new swing. Okay, a whole new swing, obviously in the direction of the trend. All right, but as you can see, this is something that happens very, very commonly in the forex market. Search for these flags, guys. Search for these breakout, pullback, continuation patterns up on the breakout of the retracement trend line. again, upon a valid bounce of the dynamic area of support and resistance, those breakout pullback continuation pattern of the retracement trend lines usually give out very high quality trading setups. Okay, they usually indicate the very beginning of a whole new swing. Okay, I just now want to show you a typical example of an inverted breakout pullback continuation pattern. Okay, basically a breakout pullback continuation pattern in a downtrend. We are looking into the euro against the American dollar. As you can see, those moving averages are rather nice, aren't they? And again, as usual, price simply, bouncing off the dynamic area of support and resistance just as usual. Moreover, what do we have there? The previous swing low. Where does the retracement find resistance at? Well, that same level, right? Former support, now working as resistance. Let's draw some Fibonacci retracement. Should be somewhere in there, around the 61 as well. As you can see, price breaches through for just, I don't know, maybe 4 or 5 pips there. It breaches through the Fibonacci area, the Fibonacci territory, okay, and also the dynamic area of support and resistance. But as I always say, the markets are not perfect. We may see a rather temporary breach, which is okay as long as price dives back down immediately after. Again, don't expect those levels of support and resistance to work right to the pip this time around. Well, okay, we overshot that level again for 4 or 5 pips more or less. But at any rate, a few different elements of resistance in this case, since we are in a downtrend, coming along the dynamic area of support and resistance. And as we get the bounce, well, as you can see, this is pretty repetitive, pretty mechanical. Is this a bounce we would be interested in trading? Yes, it is indeed. So, if it is indeed a bounce we want to trade, what are we to do? Well, we are to define the retracement, or more specifically, the retracement trend line, which is what I'm going to do right now. Just give me a second there. Okay, that's the retracement trend line. Now, obviously, what I am to do is to wait for the breakout and to zoom into the into the trigger chart as usual. Once again, please mind how it's not even necessary to zoom into the shorter time frames, into the setup chart, to see that breakout pullback continuation pattern. Do you see that? Breakout, a 2-bar pullback, those 2 bars in green there, and from there we trigger our short entry, okay, our sell entry right there, our stop loss being right there. Almost gets triggered right there, to be honest, but at any rate it didn't quite happen, okay. We saw a little bit of a wobbly price action there before price did indeed finally take off for a whole new swing within the trend. Alright, again, entry, stop loss, and again, a little bit of a wobbly price action, and eventually off it goes. If you want, I can simply zoom into the shorter time frames, into the 1 hour time frame. Just give me a second, let me scroll back. Alright, there we are. So, beginning of the swing point. Do you see this micro swinging pattern? Okay. By the way, this gap here was probably the weekend. Okay, the Friday night price closed at that moment, at that level, and then on Sunday evening price kicked off right there for the week. Okay, a little bit of a gap, but nonetheless it doesn't really matter. Okay, again, swinging on a price action as price retraced in the setup chart. So that gives us the possibility of drawing that outer trend line, which is what we do. Eventually we get the breakout, okay, and that's the breakout pullback continuation pattern I was mentioning before, and that's where it almost got triggered. It didn't quite get triggered, almost did, but not quite. All right. Again, breakout, pullback, continuation, entry. That's the end of the breakout for us. So the entry would be somewhere in there. That's our entry. That's our stop loss. And again, a little bit of a wobbly price action, sideways price action before price takes off in profits. All right. Again, very, very prototypical price action. Okay, well, I reckon that's pretty much it as far as using the breakout pullback continuation pattern in order to trigger your entries of the trigger chart. All right. Now, for all of you who do not want to mess around with the trigger chart, for all of you who want to trigger your trades straight from the setup chart, straight from the time frame you identify the trend at, let's now review simply a second way of entering your trades, again straight from the setup chart. Okay, this is going to be really quick because triggering off the setup chart is very straightforward. Simply wait for price to retrace within the dynamic area of support and resistance, even a little bit farther beyond if that happens to be the case, okay? And as price bounces up and basically finds rejection of the dynamic area of support and resistance and of any type of confluence of support around that area, you would trigger at the first candle close, okay? Candle close in the setup chart that takes place above the dynamic area of support and resistance. Now, I know that may sound a little bit confusing. I'm just gonna repeat that to make sure we are all on the same page. So, as price retraces back down, it dives into the dynamic area, it hopefully finds rejection of any type of confluence of resistance, support, since this is an uptrend, any type of support we may find in there, and as price rebounds to the upside, on the first candle that closes above the 30 simple moving average, again on the setup chart, all right, well, as that candle closes, as the new candle opens up, that's where you click on your buy button. Pretty straightforward, as you can see. Basically, we simply wait for the candle to close, for the pullback to die out, then we wait for the bounce to appear, and we wait for the confirmation, for the candle to confirm the bounce by closing above the 30 simple moving average. What about the stop loss? Well, the stop loss can go either a few pips below the bounce point, meaning the lowest point of this retracement, or few pips below the 50 simple moving average, meaning at the other end of the dynamic area of support and resistance. Please mind that you are triggering your trade just above one end of the dynamic area of support and resistance, you would be placing your stop loss few pips beyond the other end of the dynamic area of support and resistance. Okay, it makes sense, right? It makes sense. You're waiting for the bounce to happen, okay, the bounce to confirm, and then enter there, stop loss there, and hopefully you should see a bounce over the following candles. Pretty straightforward, as you guys can see. There is no need to complicate things, okay? No need to zoom into the trigger chart if you don't wish. Now, if you want to, again, sharpen up your entry as much as possible, then yes, you may want to indeed be following those breakout pullback continuation patterns of the trigger chart, right? But if you want to keep things simple, maybe at the beginning, as you get familiar with the system, you may want to simply trigger straight off the setup chart. Okay, now I'm going to show you, as usual, some live examples. Alright, now we are again looking into the euro against the American dollar 4 hours time frame. I showed you this. I showed you guys this. This chart a few minutes back. Remember, we were drawing the retracement trend line. Right there, that was the breakout pullback continuation pattern we were identifying on the setup chart, and also obviously on the trigger chart as well. That was our entry, that was our stop loss, and well, this was a little bit of a wobbly price action before price took off, right? Do you remember? Well, now, since we are going to be triggering straight from the setup chart, there is no need to draw or to use the retracement trend line, since we are not going to be waiting for any breakout pullback continuation pattern there, okay? So we can take it off and we can simply trigger as the first candle closes below the 30 simple moving average. This candle here, actually, let me zoom in a little bit. All right, that candle here closes just over the 30 simple moving average. Okay, just for 1 or 2 pips, but at any rate, it might not be a clear entry. We may have, or we may want to wait for the next candle to close, which closes right there. And well, at that moment is where we click on the sell button, right? As this candle closes there, as the new candle opens up again. Whoops, sorry about that. Right there, that would be our entry. What about the stop loss? Well, the stop loss, we can place it immediately above the highest point of the pullback, or if you so wish, you can simply place it right above, few pips above the 50 simple moving average, right there. Both areas are equally valid. Okay, I've never quite found any of the two options to be any better than the other one. They usually both work equally, just as fine. So I'll let you decide which one to go for. Again, there is not really any major difference, at least in my experience. All right. So that's the entry, and well, off it goes again for a whole new swing. All right. Let me zoom out. Let's imagine we take this swing there. The entry would be right there, as this candle there closes, since it's the first candle up on the bounce, to close below the 30 simple moving average. Right there is where we would click on our sell button. Stop loss either there or again just above the 50 simple moving average. As you can see, at no point either on that trade or on that trade that stop loss is challenged at any point. Okay, price simply takes off immediately after, okay, right away. So at every single point throughout the trade, we would be effectively in profits. Okay, again, at no point the stop loss gets challenged. Okay, let me scroll back. Let's see if I can find another valid trend here. All right, there we are. There we have another valid trend, right? With those moving averages nicely pointing down, etc., etc. We also have a rather harmonic price action, actually. Take a look at those. Actually, very, very harmonic price action. Beautiful, beautiful swings, aren't they? All the way until here, as you can see, as price retraces back to the dynamic area once again. We don't get no bounce there, do we? No, we don't. We get a solid breakout. Well, driving price very close to the 100 simple moving average. A number of bars closing above the dynamic area. The 50 and the 30 moving average are now flattening out. Okay, basically pointing sideways now. They are not pointing down, are they? No, they are not. They are pointing sideways. Therefore, I would say that the trend at this point comes to an end. But until that point, we've had quite a few valid trading opportunities here, haven't we? So, where do we take our trades? Well, oh, by the way, please mind, this is another prototype. Actually, I'm so sorry about that, guys. It's really difficult to draw with your mouse. Do you know that? Anyway, what's that, guys? Do you see that? That's another flag, isn't it? Now, what's that? Here we are. That's another flag, isn't it? Now, what's that? Isn't that another flag? Okay, another pole and another retracement channel. Another swing and another retracement channel. Another swing and another retracement channel. As you can see, this strategy is rather mechanical. Okay, it's rather repetitive. It might not be the most exciting system in the world. I know that, but it doesn't matter. I mean, it doesn't matter because it works, and it works multiple times within the same trend. That's the beauty of this system. You can find multiple trading opportunities within each or within one single trend. Okay, swing, retracement channel, breakout, okay, or rather bounce, breakout of the flag, off it goes for a trade. Pole of the flag in itself, bounce of the dynamic area of support and resistance, breakout of the flag, off it goes for a whole new trade. Yet again, the same thing, the pole, the flag, the dynamic area, the bounce of the dynamic area, and well, so on and so forth. We get a fake breakout there. Do you see that fake breakout? Let me actually zoom in. There we are. Do you see that fake breakout? That's exactly why you want to wait for that breakout pullback continuation pattern to happen. All right, we don't get that here. This is just a simple breakout. Okay, we have no confirmation of the breakout with a further breakout pullback continuation pattern. It's just a price stabbing or taking a peek, a stab to this channel boundary, and then immediately after it comes back within the dynamic area once again. Okay, so be very careful. Don't trade single breakouts of those channels, of those outer retracement trend lines. Wait for the breakout pullback continuation pattern. Okay, but at any rate, I'm losing focus of my presentation here. I want to talk. Let me just clean the chart. Just give me a second, guys. There we are. As I was mentioning before, on this specific moment in the presentation, I want to focus about trades straight from the setup chart. So, pullback, bounce. This is the first candle. Let me zoom in a little bit. That's the first candle right there to close beyond the dynamic area of support and resistance. That's where we enter the market. We can place our stop loss either there or there. Obviously, this one would be a rather more conservative since it's larger. Okay, the more conservative you are, the more breathing room you give your trades. Depends on how aggressive or conservative you are, whether you want to go for tight stop losses or for broad stop losses. That's entirely up to you and entirely up to your risk profile as a trader. Okay, I will let you decide on that. At any rate, both options are equally valid. Next swing, pullback within the dynamic area of support and resistance. We wait for the first candle to close beyond the 30 simple moving average. It's not that one, since it closes within the dynamic area. This is the first candle to close. Okay, again, enter right there, stop loss either there or there, as a result, as you can see, well, off it goes for a profitable trade. Okay, pretty much just as in here. Again, pretty mechanical stuff, repetitive and all that. But again, why would you change something that works? Okay, we don't try to have fun. We try to find profitable trading opportunities. Okay, so in my opinion, I would rather have a boring trading system than a non-profitable trading system. Anyway, sorry about that. I was losing focus myself once again. I really got to cut down on the chatter, so I simply paused the video to get back on track. Anyway, we've reviewed this swing here and this swing here. Let's analyze the next swing. Okay, we have a swing down. We have two profitable trading opportunities already. A pullback to the dynamic area of support and resistance. Let me let's actually zoom in a little bit more. All right, there we are. So this is the pullback back to the dynamic area of support and resistance. This time around, the bounce is not as sharp as in here. Okay, and also as in the previous swing, it's not as sharp, is it? We get a little bit of hesitation around the dynamic area of support and resistance. At any rate, the dynamic area does hold. Please mind that we get no multiple bar closing above the 50 simple moving average, and eventually the first candle to close below the 30 is this one there. Okay, that's where I would trade would go. Stop loss either here, 5 pips above that swing high, or 5 pips above the 50 simple moving average, depending on whether you are more aggressive with your stop loss placement or more conservative. Okay, if you are more conservative, you usually want to stretch out your stop loss in order to give a little bit more of breathing room to your trades. I will just say that I like to be rather aggressive with my stop losses. Okay, I like to be aggressive with my stop losses, and I like to be conservative with my profit taking levels. That means that I usually go for tight stop losses and also tight profit-taking levels. I like to minimize my losses as much as possible. Therefore, I like to use shorter stop losses. But I also like to cash out my profits as soon as possible, and then and therefore I simply I simply close my trades a little bit earlier on in the trade. Okay. At any rate, I will talk about profit-taking levels on the next video. Anyway, that would be our entry, okay, and our stop loss either there or there. And well, nothing special here, just another bounce within the trend. And over the in the next, as we can see on the next, on the next retracement, that's where the trend comes to an end, with those moving averages totally flat. This violent momentum-filled breakout, multiple bars closing above the dynamic area of support and resistance. All in all, at that moment, that's where I would stop searching for trades within this trend. Okay, I would simply search for other trends in some other currency pairs. Okay. All right. Well, that's pretty much it as far as trading or taking trades of the setup chart. Okay. Oh, by the way, something that I forgot to mention before is that ideally you want to see price diving within the dynamic area and therefore getting at least one candle to close within the dynamic area. Okay, you don't want price to simply touch or lick the 30 simple moving average and from there on price rocketing off. Ideally, you want price to come within the dynamic area, maybe get a close or two, meaning one or two candles to close there, and then right away they candle eventually closing above the 30 simple moving average. Okay, so yes, you do want to see price diving within and then diving back out the dynamic area. Now, in the other hand, you don't want too many candles batting around sideways within the dynamic area. The sharper the bounce, the better. The more the V form that the bounce takes, the better. Okay, you don't want price to come within the dynamic area and from here price simply butting sideways, moving, flapping sideways for on and on and on, maybe I don't know, 5, 6, 7 different candles closing around the dynamic area. That usually signifies market hesitation, market confusion, and that's not usually a good idea. Okay, you want to see these sharp bounces. So as price dives within, you want to see price heading back out within 1 or 2 candles, okay, up on the bounce. That's again what my personal experience has proven to lead to the best trading, to the best trading opportunities, meaning to the best upcoming swings. Again, that's just my personal experience. Okay, well, this is already a long video. It's time to wrap it up. We now know how to enter the trade and where to place our stop losses, right? Well, in the following video, I will show you where to place your profit-taking levels. Okay, basically where to cash out your profits. That's going to be an interesting video because firstly, I'm going to introduce a new indicator, and second, I'm going to introduce the idea of sequential exits, which is something that I personally apply on every single of my trading systems. Okay? Alright folks, I'll be waiting for you at the next video. Cheers.